So you're thinking about buying a business. Should you do it? How do you make sure that you're putting yourself in the best position possible to actually make money and succeed? But most importantly, how do you protect yourself so you don't get ripped off or screwed out of thousands or tens of thousands or hundreds of thousands of dollars? When I bought my second franchise location, it was an existing business. I represented myself. I had to deal with all the moving parts. I learned a lot. I made a lot of mistakes. And in this video, I'm going to break it all down for you with everything you need to know when buying a business so that you can avoid some of the mistakes that I made. Let's jump in. All right, so if you're new here, my name is Tariq Johnson. I built a multi-million-dollar franchise business and have bought and sold multiple locations myself. But in this video, we're gonna go over 4 main things in regards to buying an existing business. And I'm gonna tell you what those 4 things are. And then I'm gonna jump into detail later on in this video. So make sure that you stick around because this video will save you so much time and money and pain and frustration in the process of buying an existing business. But number 1, we're gonna talk about, should you even buy an existing business? Is it even make sense for you? Number 2, the difference between an asset sale and actually buying a business. This is a very important distinction and you're gonna wanna make sure to stick around for that. Number 3 is how to protect yourself and do the right due diligence and have the right contingencies in place on the business deal. And then number 4 is how do you pay for the business? Quick disclaimer on this video. I'm not a lawyer, I'm not an accountant. It is important that if you are looking to buy a business that you hire a professional, hire a business broker, hire a business consultant, hire a lawyer, hire an accountant. You need to make sure that you have the right team. And so like Meet Kevin says, don't sue me, bro. All right, so number 1, should you buy an existing business? Well, let's think about it for a second. Depending upon your situation, what you're looking at, an existing business can have a lot of really good benefits. Overall, an existing business could be less risky, right? Because you're buying a business that already has customers, it already has revenue, it has sales, it has profits, hopefully, depending upon the business that you're buying, and you're buying an existing customer base, right? So ideally, you're just stepping in and taking over the business. But an existing business could also be more risky because generally you're buying a business based off of a multiple of the profits. It's just meaning this, if the business is making $50,000 and you're buying it for a 3 times multiple, 50,000 times 3 is $150,000. But what happens if the business actually isn't really making $50,000? Or what happens if the new owner actually winds up taking some of the customers with them? And these are some of the things that we're gonna cover to make sure that you can protect yourself later on in this video. And I'll show you exactly how you can protect yourself so that those things do not happen to you. But when you buy an existing business, that's a risk that exists. And you have the risk of the staff leaving, you have all sorts of risks that you have to deal with an existing business. So you've got to really look at, is an existing business right for you? Like, could you start your own business? And really compare the price points. Buying an existing business doesn't always make sense. And depending upon how much money the business is not making will really impact whether you should buy an existing business. Now, this is one of the things that I help a lot of my clients with. Over a handful of clients right now that I'm helping to actually look and find an existing business for sale. And these are some of the things that I walk them through step by step. Another thing is that the employees could all quit. Kind of like how I mentioned before, I was talking to someone who's ran multiple successful businesses, and he was telling me a story about someone buying a business and then the next day all of the employees quit. So that could be a real challenge, especially if you don't know anything about the business or you're not skilled in that area. Generally speaking, when you're buying a business, you want to make sure that at least you have a skill set around that business already so that you can, day one, have something that you can bring of value, or make sure that you're going to get a bunch of training from the owner so that you can actually learn how to run the business. Another thing is that the previous owner could be stealing. So as an example, I know a family member of mine actually They had bought an existing business a couple of years ago, and they went through an issue where the owner had like embezzled money or was still embezzling money, and it was like this whole big thing. So there's a lot to really be wary of when buying a business. Now, don't let that scare you off now. There's a lot of really great benefits about buying a business, and when you stick around for the rest of this video, I'm going to show you the things that can protect you when making this decision. Now, the other part about buying an existing business is you have to have the money, right? I mean, generally speaking, an existing business is going to be fairly expensive depending upon the business. I mean, you can buy existing businesses for as low as $20,000, $30,000, $40,000. But if you're buying a really good quality business that already has systems and a team and staff and management in place and is making a decent amount of profit, you're probably going to pay at least a couple $100,000 for the business. So you've got to be able to be in a financial position or have kind of the resume and skill set to be able to figure out how to finance and pay for the business. Now, no matter what stage of your business buying process that you're in, or if you're just completely new to business, we've had over 1,000 people download my 7-step blueprint to business profits in 60 days. It's a 28-page ebook and PDF that guides you step by step how to get any business profitable in 60 days or less in any industry at any time. We did this with our first franchise location that took over $300,000 to get open. So make sure to go to tariqjohnson.com. You can grab it there, or the link will be in the description below. So let's cover buying an asset sale versus buying a business. Now, this is a really important distinction. So an asset sale is when you're just buying all of the assets for the business. You're not buying the entity. As an example, if the business is XYZ LLC, then you are taking over that entity and that LLC and everything that that business owns and all of its debts you are acquiring. It's a much more complicated business sale transaction, and most of the times when buying a business, you're buying an asset sale, you're going to wind up creating your own new entity, and you're just buying the equipment and the customers and the inventory and all those different things. So it's important to distinguish what you're doing and what you're buying. Again, if you're actually buying the business and the business entity, that's much more complex, because then you're getting the cash that's in the business bank accounts, you're getting the debts associated to the business, and it becomes a little bit more complex in valuing the business, as well as figuring out who gets what. And there might be some things that get stripped away. So it's really important to be clear about what it is that you are buying. As an example, when I sold my franchise location in California, sold it in September of 2020 after we had our record month in sales and had owned the business for just about 3 years, that was an asset sale. So the one thing about buying an asset sale is you have to set up all new vendor relationships. You have to reestablish connections with all the utility companies or transfer service. So it's a little bit more complex, right? So my store in California that we sold, the new owner had to fill out new paperwork with his entity, with the point of sale provider, the food company that we purchased all of our food from, all of the different vendors that we had for the business. He had to then establish a new relationship with his new entity. He had to set up a new payroll account and all these different things. I think you get the point there. But it's important to distinguish asset sale versus buying the business. If you're buying the business, you're going to take over, again, all of those things, and you're just going to become now the owner of that entity or director or manager or whatever it is on the S Corp, LLC, C Corp. If it's an asset sale, you're going to have to go in and set up everything from scratch or transfer it all to your new ownership. All right, in a second, we're going to talk about how to protect yourself. In the meantime, if you're getting value out of this video, make sure to subscribe down below. All of my videos are about supporting entrepreneurs or individuals who want to be entrepreneurs. So go check my page. You can see all of the different videos that I posted. Also, give this video a like for the YouTube algorithm and help show this video to more and more people. Drop me a question below on what your questions are in regards to buying a business or where you're even at in the process. I know it could be really complicated and confusing and overwhelming. I mean, that's why I love helping my business coaching clients to help them through the process of buying a business, because it can be really confusing, but the reward can be really amazing if you can find a really good professional that can help you. So in thinking about how to protect yourself, the first thing that you have to do is make sure that you're using a purchase agreement, a legally binding purchase agreement when you're actually buying the business. Think about this. Whenever you want to rent an apartment or buy a house, you have a contract. There is a legally binding contract that goes between the buyer and the seller that protects all parties and lays out clearly what the expectations are and what each party is going to get, as well as contingencies and all these different things. So when you're buying a business, you have to make sure that you also have a legally binding contract that is as clear as buying a house would be in terms of the specifics of the transaction. Don't go doing any handshake deal. I don't care if this is a family member, if this is a friend, if someone that you've known for 20 years. You have to have a legally binding purchase agreement. Very important. The second thing in protecting yourself is use an escrow company. So if you've ever bought a house, you know what I'm talking about. After you sign that purchase agreement, you place a deposit with the escrow company. The escrow company holds on to that deposit because they're a non-interested third party, and they're going to hold on to that deposit in accordance with the terms that were negotiated in your purchase agreement. So it's the same thing with buying a business. You want to make sure that you're using an escrow company that has experience in doing business sale transactions. So again, when I sold my store in California, we used an escrow company. I was able to find the escrow company, and keep in mind there are fees associated with an escrow company. It's common practice for both parties to split the fees down the middle, but they held on to the deposit until the contingencies and all the things were removed for the transaction. Now, make sure you stick around, because in a little bit I'm going to talk about due diligence and the contingencies that you need to have to protect yourself. And this is probably the most important part of the video, so make sure to stick around for that part. All right, so let's talk about due diligence. Wow, this part is really, really important. Due diligence basically means just doing research, right? Doing all of your fact checking to make sure that everything actually checks out for the business. And the most important part of the due diligence process can be, but not necessarily, is reviewing the financials and the financial statement. So what does that mean? So when I say reviewing the financials, there are a couple things. Number one is the profit and loss statement and the balance sheet for the business. The profit and loss statement is going to show the profit and loss of the business. It's going to show your income, all the different ways that sales are generated. So it would list the different types of sales or revenue for the business. So as an example, for my juice bar businesses, it might show, okay, we have this amount of money coming in from in-store sales, this amount of money coming in from Grubhub or Uber Eats or DoorDash and all those different things, so that you can get a breakdown of the revenue and understand not only how much money the business is making, but where is the money coming from. The more you understand about the business and really have your head wrapped around the financials, where the money's coming from, how it works, and the potential risk and pitfalls, the more you're going to be able to put yourself in a position to protect yourself, actually make money and profit in buying this business. So the other thing is the balance sheet for the business. The balance sheet is going to show all of the assets and liabilities for the company. So if you don't know how to read a profit and loss statement or balance sheet, then make sure you watch a YouTube video, read an article, or buy a little book on how to read financial statements for businesses. The couple of hours that you will spend doing that and learning how to do that and getting a crash course on it will save you so much time. Save you so much time and so much money. And if you're going to be a business owner, you got to be able to know how to read financial statements. Now, if you don't worry. I didn't know how either before opening my first franchise location, but it's something that I had to learn, and it's something that, quite honestly, I'm still learning, because depending upon the business, the profit and loss statement and the balance sheet can vary in complexity. So the more that you know, the more that you're educated, the more you'll be able to protect yourself and make money. All right, so the second item on reviewing financials and doing due diligence is you want to verify with the tax returns. Because here's the thing, a profit and loss statement could just be a PDF document, could be on a spreadsheet. Usually companies are going to be using like QuickBooks or something like that, and they'll have like an accountant that will do it. But unless the financial statements are certified by a third-party company, when I say certified, meaning that they are saying that they have verified that this information is accurate. I'm sorry, the term I was looking for was audited. They've been audited by a third-party company. With most businesses that are selling out there, they're not going to have been audited by a third-party company. So you're going to want to take a look at the tax returns. Does the profit and loss statement actually match what the business tax returns, what they're actually filing and sending off to the IRS? So that's a really important point. Then you're also going to want to review the accounts receivables and the accounts payable for the business. So what's still in backlog? Like what revenue has not been collected for the business? And then understand if it hasn't been collected, why? Is there any accounts receivable that are 30 days past due, 60 days past due, 90 days past due? Or are you going to be able to collect that money? And if it's just an asset sale and it winds up being a different entity, you may not even have really any legal rights to collect that money. So it's something to dig into and make sure that you have an understanding of depending upon the business. So equipment, you want to make sure that all the equipment's actually working. Hire someone to do an inspection on the equipment. I mean, geez, with my juice bar business and the location that I bought, I mean, I wound up paying someone a few $100s to do an inspection on all the equipment, because we're talking about tens of thousands of dollars in equipment in a store like that, refrigeration units, freezers, things that can cost a lot of money to replace. So if you're, as an example, if you're buying a business, and let's say you're buying that business for $200,000, and that business has $100,000 worth of equipment, and all of a sudden, shortly after you buy the business, a month later, a $10,000 piece of equipment blows out and you got to buy a new one. Well, that's a big issue. So you want to make sure that you're doing due diligence on the equipment. Get the maintenance records for the equipment. When was the equipment serviced? Was the equipment ever serviced? These are all important things to think about and consider. Does the equipment have a warranty still associated to it? If it does have a warranty associated to it, when does the warranty expire? You also want to talk to the vendors. Talk to the vendors and get an idea of what the other owner was like, what their relationship with the vendors were. You could wind up learning a lot about the owner, the person selling the business, and overall how the business was run. Like they might tell you, yeah, this person was always late in paying their bills and it was like struggling. We were always pulling teeth to try to get paid, or they were always ordering stuff last minute. It will give you a sense of how the person ran their business, so you know to either do a lot more due diligence and really make sure that you cross your T's and dot your I's, or they might say, yeah, this person, they paid their bills on time all the time. They were a great business owner. I mean, they were on top of everything. Then you have an idea of the type of person you're working with. So another part of the due diligence process is looking at sales reports. If there's a point of sale system or whatever system they use for like CRM, customer management, you're able to just validate the sales numbers from the profit and loss statement with the actual sales reports in their system. Particularly with franchises, this can be really helpful because you can see a really detailed breakdown of the sales and just make sure again that you're understanding the business at as deep of a level as you can. The more you understand the business, the more higher likelihood that you can succeed with the business because you know what the challenges are, what they're doing well, where the money's coming from, and you know what to focus on. Location and competition. This one is really key because what you need to understand and check before you buy the business is, are there any new competition in the area? And do your research on who is your competition right now? Who's in the area around the business, or the new people popping up? Are there plans? Just make sure to research that because that could really impact your business. And when someone's selling a business, they have their reason of why they tell you they're selling the business, which could be 100% true and authentic, but it may not be. And unfortunately, there are people out there that would lie or misrepresent in order to protect themselves and put you in a bad situation. So this is something to really, really focus on and make sure that you take a look at. Maybe there's an opportunity where one of the competition has closed. Actually, there's a client that I'm helping right now to look at buying a business. Turns out one of the competitors that was like right across the street just closed down. And so that provides him a little bit of a competitive advantage because it's a very similar business. And then those customers might be able to come over to his business and actually help him out in the process. Key customers. So this is an interesting part. So depending upon the business, is there a certain percentage of the revenues that are coming in from like just a couple of customers? I recently was talking to another business broker that I reached out to find out about a business that was for sale for one of my clients that I'm working with. And it turns out that so the business sold to someone, and a few months later, about 6 to 7 months later, they lost a customer that represented over $100,000 in revenue for this business. This business was doing a little bit over $1 million a year in sales, so about 10% of their revenues were lost. And now this owner was now reselling the business and asking a stupid price. It didn't even make sense. But this is something that's important to think about. Where is the revenue coming from? How many different customers? And what would be the impact if one of those customers left? All right, now let's talk about contingencies. If you've made it this far in this video, kudos to you, great job, because we're really diving in to some of the really important parts about buying a business and how to protect yourself. And contingencies are one of the main reasons that you protect yourself. I mean, think about a real estate transaction as an example. You have like a home inspection contingency, you have a financing contingency. There's all these different contingencies. Same thing when you're buying a business. You need to make sure that you have contingencies in place. So number one is make sure that you have a funding contingency. How are you planning on funding your business that you're buying? Are you getting an SBA loan? Are you getting a different business loan? Are you getting a home equity loan? Paying cash? Are you doing seller financing? How are you funding it? And make sure that you have something in the contract protecting you in case your funding falls through. Because if you don't, then you could lose your deposit that you put in escrow. So it's a really important part to make sure that you have buttoned up. All right, so when you're talking about a lease approval for the business, if you're gonna buy the business, well, you have to get approved with the landlord if you want to continue to operate that business in that same place. And there's the risk that the landlord doesn't approve you as a tenant. And if the landlord doesn't approve you as a tenant, well, unless it's a business that can be moved easily and isn't very disruptive to the business, well, then you're probably not going to wind up buying the business. So you need to make sure that if the landlord doesn't approve you, that you can back out of the deal and get your deposit back. The financial contingency period. This is really important. So you want to make sure you negotiate a certain period of time for you to do the due diligence on the financials that I talked about earlier in the video, right? Tax returns, profit and loss statements, all those different things. Actually, bank statements was something that I didn't talk about, but you want to make sure to review bank statements as well. Now, keep in mind, as thorough as I'm trying to be in this video, there's no way to catch every single detail in here. So make sure that you go to my website and download my 7-step blueprint to business profits in 60 days, because there's some really good information and stuff in there to protect you. And I'm going to be posting more videos like this, so make sure that you subscribe, because each time I'll probably be saying something and adding a different perspective around this that I may not have talked about. But again, it's always really important to make sure that you're getting a professional that can guide you and help you along the process in buying a business, to make sure that you don't make mistakes that can cost you tens of thousands or hundreds of thousands or millions of dollars. Get it? But the financial contingency period is basically a certain period of time. Let's say you put 60 days for you to be able to review all of those financial statements that I talked about before. And if something doesn't quite add up, or you don't feel completely comfortable, then you're able to back out of the deal within that period. Now, the other thing, which is not really a contingency, but it's so important. This is so key. I'll tell you a story, actually. I'll tell you the story after I tell you, but it's a non-compete. So you want to have the owner have a non-compete section in the contract that says they will not open up a like business within a certain mile radius for a certain amount of years. let me tell you this story. So I was talking to a friend of mine. He was telling me about a story about he was going to buy a bagel business. This was years ago. And the owner would not agree to a non-compete. And so because of that, he wound up not going through and didn't buy the business because he didn't feel comfortable. Well, it turns out that business wound up selling to someone else. And the owner who sold it wound up opening up a new bagel place like a block or two down the street, like right on the corner in a better location. And then the business that he had sold to the other person wound up going out of business. Woo! Yeah, that can be scary. So you want to make sure there's a non-compete in your contract that says this owner cannot open a like business, and again, work with a professional so you can make sure to get all the languaging down, or an attorney. They can't open up a business dealing in the same industry or selling the same stuff, let's say in a 100-mile radius or a 50-mile radius or 25-mile radius for 3 years, 5 years, 10 years. I mean, how you negotiate it is up to you and the person that you're working with, but this is a key part or else it could get you in trouble. You also want to make sure that there is something in your contract that the seller is providing you complete and accurate information, and you want to make sure that they're signing an agreement saying that they are. Because if they were to leave something out or wind up lying about something, then you could have some sort of recourse to be able to protect yourself in the back end. So you want to make sure that that's a part of your agreement or contract, or have them sign a completely separate document as a part of the business transaction so you can make sure to protect yourself. And the last part is funding the business. All right, so the way that you want to protect yourself in this, well, again, we already talked about making sure that you have a financing contingency in the agreement. And by the way, I've made a couple of videos on how to fund a business and how to get financing and make sure to pay for the business. I'll post a thumbnail here and what that looks like. And there will be a link in the description below so you can go ahead and watch that video and find out the details about how to fund a business. I'm not going to go into all the specifics in this video because this will last a whole nother 10 or 20 minutes and the video is probably getting long already. But here's the part I can tell you about is seller financing. And sometimes you can negotiate seller financing with the person selling the business, and this could be a really great opportunity for you. And it could potentially be a good opportunity for you to not have to use your capital that you saved up and put yourself in a better position, or even negotiate deferment of payments, meaning that for the first 6 months of you running the business, you don't have to make any payments, or for the first 3 months. And it just gives you an opportunity to get in there and get the business up and running, or turning things around, or you investing money into the business to improve things and not have to make payments on your financing. So these are all the ways how to protect yourself when buying a business. Guys, if you liked this video, then make sure to give it a thumbs up, subscribe, drop me a comment below. If you haven't gotten my 7-step blueprint to business profits in 60 days, make sure you go and grab that. And if there's any sort of video that you want to see about owning a business, entrepreneurship, anything about franchising, then let me know in the comments. I look forward to seeing you in the next one.